Hey, fellow investors and fellow stock guardians. It's Thursday, February 4th, 2021. I'm Hoda, co-founder and CEO of StockGuard, reporting to you from a pretty green stock market. All three indices moved steadily upward throughout the day on Thursday and finished it at least 1% higher than where they started. The new jobless claims from the Department of Labor came out strong with a decrease of 33,000 from the previous week. Investors took it as a good sign and bought more stocks than they sold. One worrisome news that didn't get enough attention, in my opinion, is the fall of the US economy from the list of top 10 innovative countries. Innovation accelerates growth and creates an extraordinary return. Unfortunately, based on Bloomberg's Innovation Index, the US is now falling behind in science, technology, engineering, and math graduates and advanced degrees and workers in research and development. The implication for us, the stock market investors, is that we do need a bigger exposure to other countries in the world. We can't just stay home focused and expect the same extraordinary return that our parents' generation came to enjoy from the stock market because the US economy had a strong focus on innovation. Did you guys see how Stitch Fix and Match.com stocks jumped today? We talked about the market's overreaction to the news about these companies in the last few episodes. Today, we saw the bounce in their stock prices as investors put back their logical hat on. The other winner stock of the day worth talking about is Visa. Shares of Visa jumped more than 4% after losing more than 11% in January. The jump today came after the report that the company is making a foray into digital asset API technology infrastructure pilot. The decline in January was due to downgrading by financial analysts from KeyBank over the decline in cross-border travel and lower revenue for payment providers such as Visa and MasterCard. While that's true, when you look at Visa's business and operations on a StockGuard, there is not much to worry about in the long run. Profitable, cash-rich, and dominant player that pays a small but solid dividend makes the company a cornerstone of a buy and hold or even a dividend-paying portfolio if that's your thing. That's why on a StockGuard, if you click on our strategy button, you can see that the company gets a big thumbs up as an excellent buy and hold candidate and a good dividend play. One of my portfolio stocks, Unity Software, was down more than 13% on Thursday. This is a recent IPO in the gaming industry. Unity's engine power more than 50% of the world's mobile PC and console games combined, and that was the main reason I invested in this stock. The company announced its latest quarterly earnings report, and despite beating expectations, the future outlook disappointed the investors. Let's dig a little bit deeper here and peel this onion a little bit more because I think there's a broader and important story here. In the shareholder letter, the management discussed a few trends that may impact the 2021 outlook. Firstly, the company just had an excellent 2020, which is hard to replicate in 2021. COVID-19 pandemic had boosted the revenue, and as people go back to work, there would be a natural decline in gaming. To me, that's fine and not too worrisome. However, and maybe even more importantly, the company spoke to Apple's iOS 14 privacy setting that reduces the ability of game and app developers to target and send notifications to users if they choose to not share their information with apps. Unity believes that would result in 3% lower revenue for the company in 2021. The broader story here that we need to pay attention to is something that we talked about in the past. Any company that relies on tracking people's behavior outside its own environment would be impacted, and the biggest beneficiary of such functionality is Facebook. Unity's shareholder letter should be a cautionary story for Facebook investors. I'm both an investor in Facebook and Unity, and this story makes me worried about Facebook more than Unity. I won't be too surprised to see a drastic price decline for Facebook. something to watch in the next few months and quarters to see if this trend is gonna have an impact on Facebook. As always, if you like to give a Stockcard VIP a try to research as many stocks as you want and follow successful investors' portfolios, use promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. See you tomorrow.